Start the program with the markets and the multitude of company profits that were released today. Edward Boyd is going to take them all through us. And Ed, look, some of those results, they caused big falls, big movements in share prices both ways.
They sure did, Ross. There were some pretty sharp reactions today to some of those profit results, and there were a heap of profit results today. Also fears from US investors that interest rates will be lifted by another 75 basis points next month. So that pushed the Aussie stock market down today. It finished down about 1.2%. Let's take a look at some of these profit results. Altium, the tech company that makes circuit board software, reported a near 60% increase in net profit to $56 million US. That's on sales revenue of about $220 million US. This is its share price over the last 12 months, but it's expecting revenue to grow up to 20% in this new financial year. So the market really liked that result. Its shares shot up about 20% today. Mining engineering company Monadelphous said skill shortages continue to be a problem in Western Australia. It's restarted hiring workers from overseas to help plug that gap. Profit jumped about 11% and it increased its final dividend by an extra 4 cents per share to 25 cents a share. You can see today it was also another top performer, up 6%. The medical glove and surgical suit maker Ansell's revenue, it fell about 4% during the year. You can see the shares over the last 12 months down 33%. Profit was down about 36% for Ansell to about $159 million US. It's all due to a sharp downturn in the need to buy gloves and protective gear after the pandemic. But analysts, they liked the result today, and today its shares, they jumped 9%. The kitchen appliance maker Breville's profit, that was 16% higher at about $106 million on record sales at $1.4 billion. Breville's major shareholder is Premier Investments, which is controlled by billionaire Solomon Lew. Today, the result was pretty much flat, the shares for Breville. Moving on to Pilbara Minerals, it's a lithium miner. It posted its maiden profit result today, about $562 million. Revenue was up about 580% to $1.2 billion. It shipped about 361,000 tonnes of lithium concentrate during the year from Western Australia, and it made a profit of about 2,600 Aussie dollars every tonne. And you can see the shares today climbed pretty much at the open, up about 3%. Boral's earnings, they were cut by a third due to lockdowns, bad weather and rising costs. The building materials maker, controlled by billionaire Kerry Stokes, reported earnings of about $107 million. It spent an extra $58 million on energy costs during the year. But today, its shares, they lifted about 2.4%. Endeavour Group, the Woolworths spin-off that includes alcohol retailers Dan Murphy's, BWS and ALH Hotels, it said revenue was flat at about $11.6 billion. Customers did begin returning to its 350 hotels during the second half of the year, and that helped it increase its profit by about 11% to $495 million. The shares were up over the course of the year, but today, Endeavour Group was the worst performer on the market, down 12.3%. An online retailer, Kogan, it reported a net loss of $35.5 million. That's its first loss since listing in 2016. The result was dragged down by the cost of share options for its founders and a miscalculation on the amount of inventory it thought it would be able to sell. So its warehousing costs to hold that excess stock blew out, and it did not pay a dividend to shareholders. Today, the shares were down about 6.6%. And then shares in the card payments company EML Payments, they plunged about 12% today. It was one of the best performers yesterday. It jumped 10% yesterday after announcing its full-year profit results. Well, today, the company was brought back down to earth with some pretty frantic selling, and it was one of the worst performers on the market. Ross, that is today's market update.